time to join the conversation today. I'm looking forward to a great conversation for most of today. We will give ourselves a few minutes to start our conversation. I'll be your host today. My name is Ronald Mukasa. I'll be your host, and we hope that as we run on, we can be able to learn something new, prepare ourselves better. We'll give our colleagues a few more minutes. Let's give them some 3 to 5 minutes so that people can be able to plug in our speaker. Mr. Maurice Wamayi is already on the call and he's set to go. But let's just give it a few minutes so that friends and colleagues can be able to join us. A big thank you, everyone who has joined us. We are very honored to have you here today. Great. Good morning, Bwana James. Yes, Mubarak knows our tradition here. Good morning. Thank you for saying hi in the chat box. Let's go to the chat box and say hi. Greet a friend, greet a colleague. Kind of find out how they are doing, so that we can be able to move together. So say hello to someone, greet them, tell us a bit about your business, and we can be able to get going. This is our final session this year. It's an exciting time. We have had quite a long journey, which we'll have an opportunity to debrief at the start of next year. But for now, really, we are always excited when we come together and colleagues have a moment, just plan and see how we can be able to get our businesses better. I see, yes, Mubarak, thank you. I see Isaac. Isaac says good morning. Isaac, tell us a bit about what you do. I see Henry Chivumbi. Buana Emma, thank you. Thank you so much for being here. We are very excited whenever we have you. I see a number of people who are already in the room. I see Martin, one of the regulars here. Thank you for joining. Andrew, I see Okirol, thank you for being here. Daphne, thank you. Eunice, thank you for joining. Galamu, thank you for joining. Rehema, no, Gulamu Rehema, not Galamu. Gulamu Rehema, thank you for joining. I see Joshua, Wana Chujuche, thank you for being here, sir. Judith is here. Kamba, thank you for being here. Kelly, I see Ninsima, thank you for being here. Hilda, thank you for being here. Peterson, thank you for being here. Proskovia, glad to see you. Sheila, glad to see you. David Wanda, thank you for being here. Joram, Odeke, thank you so much for joining. I think the room has already taken off. There are over 30 of us here. But really now we want to start our conversation and see how we can be able to kind of use this opportunity we have to look after our tax issues in our businesses. And today we are very honored to host CPA Maurice Wamayi. Maurice is a member of the Institute of Certified Public Accountants. He's a tax and business consultant, and he leads the team as managing partner at MW Tax and Financial Consultants. Maurice is here to tell us a bit about really what we should look out for as the year comes to an end. Remember, there are obligations, there are returns which you need to make, there are things which you need to get done. And sometimes as business people, we miss them out. So we felt that as we close the year, which better way to close the year than to remind us on the things we need to do in the next couple of weeks. So we're having a tax checkup, what every business must know before the year end 2024. We hope that from this conversation, you can take action so that we don't get penalties, so that we don't miss out on on things which we deserve and we ain't going to do right. Without wasting any more time, allow me to invite Maurice. Maurice, we are excited to have you. Please go ahead and start your conversation today.
Thank you, Ronald, for that wonderful introduction. Just like Ronald has said, I am Maurice Wamayi. I am a CPA, and a CPA. CPA is Certified Tax Advisor by the Institute of Certified Public Accountants, but I'm also a CPA, so I'm a Certified Public Accountant. And of course, before that, I have credentials with the at university level. So quickly, just like Ronald said, our concern here is what must we be doing around this time to ensure that we don't, get penalized um, by the tax law, not read by the taxman, but by the tax law, because the taxman just enforces the tax law. That's how it is. So I'll quickly move to the next slide here, which shows us what do we expect to learn. You might learn more than this, but these are some of the things that I expect that at the end of this session, uh, the business colleagues and those in other fields should be able to have as takeaway. So you should be able to know what we mean by a tax year, under the law, because some of these jargons may mean uh, differently from the normal English that we use. And what do we mean by the tax year end? I don't want us to take it for granted because this small, what seems small, is very important to act as foundation for your tax compliance. Then we also shall learn what tax obligations are during the year, and most importantly, at the year end. Then we shall also uh, go through some steps, critical ones, that we should, know and undertake to ensure that we are compliant with the tax law. And then ways, snapshot of how to minimize tax penalties but maximize tax savings. Then we shall, of course, have a glance at some of the common penalties for non-compliance. And then lastly, we shall have a chat about some of the available waivers that we can take opportunity of. So members, that's what we have lined up. So I want us first to start slowly by knowing what we already know, but it is important that I reiterate this. These listed here, as you can see, are what we consider at MW Tax and Financial Consultants as the key tax types. Of course, there are others like excise duty, stamp duty, but these are the main ones and where we normally get issues as business people. The first one there is income tax, value added tax, quality VAT. And then we have pay as you earn, pay as you earn rate being the system under which URA forces tax collection from employees collected by the employer as the agent. Then we also have rental income, which of late URA is acting aggressively to collect monies. So members, that is what we consider, and we should know as key tax types. Not saying that others like excise duty, stamp duty, like I said, should be ignored. But for this session, I want us to focus on this. That will take us to what we need to know as obligations at the end of the year. When we say end of the year, first of all, I need to make that clear to everyone. End of the year does not necessarily mean uh, 31st December 2024. But for purposes of this session, that's what we are focusing at. So for companies, if you're a company, here I'm going to talk about uh, end of the year in context of companies. What end of the year would apply to a company around this time? So for companies which are supposed to be making submissions in terms of income tax returns around this time, the deadline being 31st December. Those must be companies whose tax year ended in June 2024, 30th June. So if your year ended on 30th June 2024, the tax law requires that you file a final income tax return after 6 months. So 6 months counting from the end of 30th June would mean July to December. So all this period starting from July ending on 31st December is a period that you are required as a taxpayer, if you're a company, that you must submit your returns. So I'm going to go through the obligations one by one. I've already mentioned a filing of the final income tax return. What do we mean by filing of the final income tax return? Final income tax return means that's the return which now you are submitting to URA, giving them your position or performance. Have you made losses? Have you made profits? It is you as the company to assess. It is called a self-assessment regime. That's how the tax law calls it. You assess yourself, you submit to URA. This must be done if your year ended 30th June 2024. This is going to be open up to 31st December of this month. So colleagues and the business forum, we have from today, the end of the year, for us to submit in time. If we don't do that, there will be penalties applicable, and we shall be looking at them. Next, after filing your return, the next thing that we are supposed to do is to ensure payment of the income tax that you have filed. Why am I saying where applicable? I'm saying where applicable because you may submit a final income tax return which is reflecting that you indeed made a loss, or maybe you made a loss last year, and when you bring down that loss, because it is allowed, as long as we are not uh, having any restrictions under the tax law, you are allowed to carry forward that loss to this year to offset the income you have made. So any tax which arises in that final tax return is supposed to be paid. And what's the deadline? The deadline is still 31st December. I'm going to be typing some of these. I intentionally did not put them because I wanted us to follow together. So 31st December is the deadline for filing. Likewise, 31st December is the deadline for payment. So when you file, ensure that when if you file today, ensure that on 31st December you are paid. If you do not pay by 31st December, even if you filed in time, there will be a penalty. Actually, interest. It's not called a penalty. Interest. URA will charge you. The tax law, not URA, will be charged interest for paying late. So it means that we file, we must ensure that we pay by 31st December. Next obligation is for you to file the provisional income tax return. What do you mean by provisional income tax return? There are two things here so far, the final one and the provisional one. The final one that you are supposed to file by end of this month is for the year which ran up 30th June 2024. The provisional one is going to be a return of his estimate, it is an estimate into the future. So from July, if your year ended on 30th of June 2024, from July to date, we are in the new year. We are in the new tax year of your business from July to date. And that year is going to run from July of this year up to 30th June 2025. So there is an obligation for you here. You're supposed to file a provisional income tax return. This provisional income tax return is an estimate. You are basing on what has transpired so far. That's why they give you the same timeline, 6 months into the year, if you're a company. So you are expecting a return of your operations in terms of what you expect to be the taxable uh, income. And based on that taxable income, when you input it in the provisional income tax return for the year 2024, 2025, there will be a tax which will come out. Now that tax is what we call provisional income tax return. Tax. Provisional income tax to be paid as well. When I suppose paid, remember you're talking about companies. So whatever context I'm speaking about here is a company. So for instance, if you have submitted your provisional income tax return, say it is giving rise to 1 million tax, as your estimate, it would mean that you are supposed to pay 50% of it by 31st December of this year. So you must pay 500,000 by 31st December. That's the deadline. If you do not pay it by 31st December, that 500, which is 50% of the 1 million, there is a penalty. And we shall look at some of those penalties as we progress. So this 50% is paid 31st December. Then the next 50% is supposed to be paid by 30th of June 2025. That's how the tax law requires. The next obligation here, if you're a company, the context within which we are speaking, is that you are supposed to file for your directors. Oftentimes, our businesses file for the company, but they forget filing for the directors. Remember, the directors will always have their profiles having income, business income as their source of income, among others. So if you have such, you are expected to file a return. Unless in the rare cases that the directors are also employees of the company, in which case, if the company is registered for payee and it submits monthly pay returns, we should be having the directors on the pay returns. But we advise from experience. I have over 20 years of experience now in tax and financial services. From experience, please file these returns. Even if you have the directors showing up in the pay returns, file them. Why? You normally get a challenge when you are seeking, when businesses are seeking for tax clearances. The first review URI does is the business filing, tick, and the director is filing, no, and they'll force you to file these returns. And remember, you'll be late at that point, and when you're late, there are penalties. So it doesn't hurt. File them. If the directors show up on the pay returns, file them, show the fact that they're indeed on the pay returns, and the tax has been withheld and submitted. No tax will be paid at this point. So it doesn't hurt. As we file the final returns and provisional returns for the company, please ensure that directors' returns are also filed. Moving on. What are the obligations if you're a sole trader? You know, if I have my business and it is my trading, line. It's not a company. It's registered with URSB as a sole proprietorship that will have its own obligations. And around this time, assuming that the tax year, you are the sole trader, your year runs from July to June. That would mean that your year ended in June, on June 30th of this year. So you have an obligation around this time, by the end of this month, to pay the second income tax return installment. Why am I saying the second? I'm saying the second because if you're a sole trader, your deadline for filing your return already passed. You are supposed to have filed by 30th of September. That is for the that is for the I'm talking about here. It is strictly for provisional, you know, provisional return. So provisional return into 2024, 2025. You're supposed to have filed by 30 September. So you have an obligation to pay the second installment. And when you're a sole trader, these are not. You have a chance to pay your installments four times, four installments. For the company, we said you pay 50% end of December, and then you pay another 50%, the final one, end of June. Those are two installments. When you are an individual, when you're a sole trader, the tax law allows you to pay four times. So it means you would have paid 30th of September, second installment that you are expected to pay by end of this month is 25%, because 100 divided by 4, we get 25%. So if I give the same example, if your provisional return end of September, you as a sole trader was 1 million, it would mean that by 30th of September, you were required to have paid 250,000. So you already expect another 250 end of this month. If you don't do that, there is a penalty which is applicable. There is interest which is applicable. And all these are configured in the URA portal as per the tax law. So as you delay, the interest accumulates. As you breach the law, the penalty waits for you because it is automated. So that is for the provisional return. However, likewise, if I can add here, if you're an individual, you're supposed to be filing the final return. Final return is going to be a return for the period which has now passed, which is July 2023 to June 2024. So we expect that you should be filing your final return as well for the year which ended. And the deadline is 31st December. So our colleagues ensure that that happens because we still have uh, a week and some few days. If you're a sole trader as well and you have rental income, you are supposed to file rental income tax return. Why am I splitting this uh, income tax return from this one? Now, this one here, if you're in business, for instance, let me give you an example. If you have a shop in town here, you file a return indicating your operation is for the shop. Now, the tax law dictates that if you have your rentals, you have your MSGO somewhere, you do not combine the two. You are not going to bring the rental income that you have earned from your MSGO business with the income from the shop. No. The rental income tax return is done separately and is there on the portal. You do it separately, and the applicable rates are also different. Whereas here, if I can just give a snapshot, whereas here you'll be taxed based on what we call bands of income, 0 to 35, to 35 to 33, 5,000. Here, you'll be taxed at 12%. Okay, that's how the law is. They've been amending it, but the latest position we have now is your rental income is taxed at 12%. No deductions allowed here. Okay, those are details, but just take away rental income, 12%, or what you have received from your tenants, no expenses. So you can't tell URA that, I earned so much, but I spent so much. No, if it's 2 million you earn, it's going to be 12% of 2 million. The expectation is that the rate being at 12% allows you to cover and be covered for the expenses you may have incurred. Remember, back then it used to be 20%. So that's how they have tried to amend. Let's get to harmonize with other countries in the region, which have the same regime, like Kenya. Kenya has this regime, 12%, no deductions allowed of expenses, and it's working for them. So the URA team here lobbied for this law to be passed, to be amended. So tax 12% rental. Next, colleagues, for companies and non-companies under VAT, we have been talking about income tax, but quickly we shall run into over obligations under VAT. What do companies have to know? Around this time, if you are VAT registered, your concern should be on what we call the VAT contra account. VAT contra account, the jargon not to really cover what we are trying to mean here. It's just an account which should be showing you your input VAT and your output VAT. What balance is on that account? Remember, the balance which is on this account, if you're a business which is making 500 million, a million and above, which colleagues that recently there was an amendment in the law to require all companies which make 500 million sales and over in a year to attach audited accounts. It would mean that this control account, this ledger here, is going to show up in your audited accounts. But the question is the balance on this account tallying, you know, at your monthly VAT returns you have been filing? If your VAT returns you have been filing are showing that you are up to date, you have paid everything, but your control account is showing the balance, what does that show to your it will be a red flag. So if I'm a URA person, I'll look at the balance on this control account as per your audited accounts, and then I'll be able to know that this person hasn't been declaring everything. So you must make sure that these two are harmonized, especially if you are making 500 million and above, and therefore you must attach audited accounts, which is a requirement now for the returns we are making. So colleagues, take note of that. That's the main obligation really under VAT if you're a company, and even for non-company. For non-companies, I'm referring to sole traders, partnerships, all those. Next, what's the obligation under payee if you're a company and even non-companies? It's the same thing. Make sure your control account speaks the same language with your monthly returns. For instance, is a balance on the control account of 10 million. Meanwhile, your pay return for December is showing 2 million. And you are saying you have been paying all the payee that has been arising for the last month. So all you know is 2 million is what is outstanding for the return which you filed in December. Meanwhile, your pay control account, your records by the accountant, or yourself if you are maintaining the records by yourself, is showing 10 million. This one will serve as a red flag to URA to ask you questions, to send you mails, and maybe even pay you a visit. So what am I saying? Please check that these things are harmonized. Also, apart from this, pick interest in what your salaries speak. If I can add here, salaries. Okay. If your books of accounts are showing, for instance, that you paid salaries of 20 million, but your pay return is in the monthly, the salaries you put there add up to only 10 million. It would mean that you didn't declare 10 million. for payee. So you are already going to pick this up as a red flag. Okay, and without explanation, of course, they're going to assess. So what am I saying? Make sure that your salaries, which go to your income tax return, which you are going to file, tally to the salaries on the salaries payable account in their records. Take note of that, members. Next, under rental income, if you're a company, rental income will be aggregated with your other business income. For instance, the example I gave, if you're a company and you have your shop, you add that shop income to the income that is arising out of your rentals. Add them together and they'll be taxed at 30%. That is if you're a company. But I said, if you're an individual, you don't mix them. They are taxed separately and the returns are also filed separately. Okay, that will take me to individuals. Okay, I've already mentioned this, so I won't spend a lot of time on this. I already mentioned file the return and pay the tax. And the deadline is 31st December of this year. That takes us to what I consider, what we consider at MW Tax and Financial Consultants as crucial. These things I've spoken about, those checks, are what we call in the tax field and financial field tax health checks. You have seen URA sending some mails, telling you to do a self-diagnosis, a health check, and then report back to them. Of course, those are just techniques of them making sure that you report yourself. But what is important is you yourself, you're supposed to be doing these tax health checks. What's supposed to be happening right now? Do all the things I've told you, among others. Pick up any queries, any variances, look for a way out before you submit the return. Actually, submitting a return to URA is the easiest bit. The hardest and technical bit that you need to be guided on, that you may need to seek help of a tax consultant, are the implications, the reconciliations before you submit the return. Because the moment you submit the return, you have basically reported yourself. So the question is the tax return you are submitting accurate? What are the risks in it? It is important. Those risks can only be known after you have done what we call tax health checks. Listed here are some of them for both companies and non-companies. One, I've already talked about this, reconcile your contra accounts. Two, be interested in what is showing on your withholding tax uh, general ledger. Okay. Now, on the portal of URA, when you log on, there is somewhere where they have a tax statement. That tax statement shows what is outstanding on your ledger, but it will also show many other things like withholding tax. If, for instance, your customer withheld tax when they are paying you, as per the tax law, that withheld tax goes to your tax ledger. Now, URA is able to work backwards and determine how much you received during the period. If, for instance, your withholding tax records show, if URA worked backwards, that you received 60 million, and then for you in your return, you have showed that your sales were 30 million. It means you haven't declared an extra 30 million. Of course, you argue that they paid me for past invoices which don't fall in this year, but all that argument must be supported with evidence. What am I saying? Do a health check. See, is there any difference between what you have declared as sales and what you received as per withholding tax records, which URA already has? If there is, you should have explanation. If indeed someone paid you for 2022 in the current year, well and good, have your evidence right. Because tax work is about evidence. If you have your evidence, URA will be fine. But oftentimes, It is about lack of evidence. But how do you have your evidence organized? By doing a self diagnosis, do checks, and have explanations. Next, review. You know, all these tax reports. By tax reports, are meaning any other reports in the system. For instance, you may have your payee payable in the system, the liability of 20 million, and then in your returns, you are showing that you have paid everything. So those inconsistencies must be looked at. VAT, I've already talked about it. You know, rental, I've talked about it. Okay, so ensure that uh, all those checks are done and they're in sync with what you have filed. Then next, do your IFRS purchases, run reports from IFRS of your purchases, your sales, and then compare that against your tax returns, because these are records which URA already has. URA already has these records. So if, for instance, you imported goods worth 600 million, and then when it comes to your VAT returns, you have only put there purchases of 200 million, there will be a quit. So what am I saying? These health checks are important at all fronts. Run IFRS reports. Also, compare your income tax sales and purchases figures against total of the same. So what am I saying? Add up your monthly returns. What are they saying in terms of sales, in terms of purchases? Okay. What is your accounts saying? If you put different figures in the final return for the year, meanwhile, the added totals are showing lesser figures, they will send you a mail. They'll actually assess you, because it's clear cut. It would mean that you didn't declare everything. So compare salaries. I already talked about this. Your salaries in the system and the total of your pay returns. What salary are they showing? Are they the same? If not, there is an issue there. Also, review your income tax sales figure. Oftentimes, we have seen companies and businesses, not only companies, and any other businesses, even sole traders, declaring, if you declared sales, for instance, of 160 million, okay, rest assured that you now qualified for VAT, you qualify for VAT. Actually, 150 million and above. You are just wait. You're supposed now to apply for VAT registration because you have hit the threshold. The threshold is 150 million in a year. Your final return, you have put 160 million. Okay, 150 million, 152 million. You qualify for VAT, apply. And the application timeline is around 1 week. If you delay, there is a penalty. So what are we saying? Know what sales you are putting in your final return and know the implications. You don't just put a return there. Okay. Next, penalties. Members, I'll quickly move to penalties. These are just some of them. There are very many penalties in the tax law and they are configured, most of them in the system. Others may not be configured, but they are enforceable by the URL. The common one is late filing. If we delayed, for instance, to file our return by end of this month, and we file in January, even if you filed on January 1st, there will be a 200,000 penalty chargeable for late filing. Two, there will be a 2% interest charged for the tax. If you file a tax payable, for instance, for the year which ended, which you are supposed to file by 31st December, there will be a 2% interest for every month of delayed payment, because there are two different things. There is filing late, there is paying late. Okay, each of them is charged. This one is charged the penalty, 200,000 monthly. This one is charged an interest, 2% on the income tax payable. If you file a loss, you'll survive this one. Okay, if you didn't make money, but if there is money made and there is tax payable, you will be chargeable interest of 2%. Then the last one here is under provision. This one normally happens when you don't pay attention to what provisional return you filed and what have you filed in your final return. For instance, I said that we are supposed to file provisional returns, okay, for this year, for the year which ended in June. Now, assuming you filed the provision for this year, last year when you were filing, or say, let me call it a loss, and then in the final return you are going to file, you put there 1 million tax, it would mean you are underprovided. There is a threshold. So those checks must be done. And there is a penalty. There is a penalty of 20%. And these penalties are automated. They are automated in the system. Okay? Enforcing the law. So these things must be known, members, as we file these returns. Next. We have double the amount. If you under declare and URA in its reviews notes that you did it knowingly, there is a double the amount under declared tax. If, for instance, you declared 1 million, but in their checks, they find out that you are supposed to have declared 1.5 million as the tax, there is a tax of double the 500. That under declaration is taxed, is penalized at double the amount. So we have to be careful what we are submitting. There is this, of course, can either be in prison as long as, but this one comes in when they feel you have falsified the records, and this normally follows tax investigations. Okay, but it can happen because it's in the tax law. So, members, those are some of the common penalties and interests which are applicable. Then, quickly, I'll move to what opportunities are available as we close the year. This is still running, and as you may know already, it is for tax which was outstanding as at end of June 2023. So if you paid your tax now for an obligation which was outstanding for a period up to 30th June 2023, there will be a waiver. Actually, it is configured in the system. There will be a waiver of the whatever interest has accumulated. Okay. So if there is any tax liability that you are aware of, you are in agreement of, and is in respect of the period 30th June, please pay it to save some of these accumulated penalties and interests. Lastly, members, I would say that the tax law is enacted with the main objective of maximizing tax collection. That's the main thing. The tax law is made there to enable, government collect as much as possible. So for them to enforce that, the penalty must be dire. If you breach, you pay through the nose. So what's the solution? What's the solution? Solution is to manage by being aware of the obligations. Okay, let us be aware of the tax obligations and ensure that we maintain and tailor our records, the financial records, your accounts, in a way that saves you money. Yes, you can save money. How do you save money? By avoiding penalties, by showing URA that you are compliant. But remember, within compliance, there are opportunities. We call it tax planning. There are opportunities of minimizing your tax. So way forward for the tax as it is now in Uganda is compliance. But I'm saying there are opportunities within compliance. We call it tax planning. And within tax planning, you will minimize your tax payments and you won't run into problems with the FOSA URL. So thank you. Uh, our request is to work with you, you know, on the tax journey, which we must face as business people. Thank you. Ronald, that's what
Super.
we had as MW Tax and
Uh,
National Consultants.
Thanks a lot, Maurice. Brilliant, brilliant submissions there. A lot, quite a lot. I felt like Each of those conversations may have needed a session of its own to fully understand. But I think you have given us a good overview as business owners on how we should be thinking uh, towards the end of. We're going to get into a couple of Q&As. We have some 2, 3 questions in the chat box. We will address those first, and then we will be able to address the rest. We have a question here from Cosma Mwonge. Does Revenue Authority have a system in place that can estimate taxes automatically, allowing individuals to pay their tax obligations without needing to file returns manually? As someone who is with a very busy schedule, I find the process of filing quite tedious and time consuming. So I am curious if there is an alternative for such cases. That's a question from Maurice. Then we have James. James says, I want to understand how newly registered companies that got registration within, let's say, August of this financial year and is not actively is not actively operating, has to file taxes. You're not actively operating, but you want to file taxes. That's the question from James. Cospa has another one. Uh, oh no, Cosma, I think I read that one. And Cosma specifies that this is related to income taxes. Uh, Someone called AB. Uh, what if you don't have the money to pay all the taxes by month end? Can you pay in installments? That's the question. Graham Nyakairu asks, are we able to get the PowerPoint for us who did not start the meeting? I think Graham usually will share the PowerPoint. Those will be shared. Wanda says, brilliant presentation. May the Lord bless you. Judith uh, asks, is a single member company the same as a sole proprietorship? Maurice, you can help define that. And is it possible to close a business if you fail to pay taxes before URI comes in? Joy, that's Joy's question. Please go ahead and answer those questions, and then we'll take a couple of others.
Okay. Thank you, Ronald, and thank you, members, for the questions. These are brilliant questions. Yeah, so automatic filing of the returns. No. As it is now, the automation is that URA has achieved so far is basically monitoring your sales, and they do that through e-freeze if you are registered, and also monitoring your receipts where you have some withholding tax from customers. So the automations, we are not yet there. We are not at a point where URA will be able to know that this is your tax obligation. Okay, because for now, they may be able to know your sales, a bit of your sales, but they won't know your other expenses. They may know your purchases yet, yes, but they won't know your, other admin costs fully, you know, because not everyone is on e-freeze. And I think that's why they are trying to push e-freeze, because at that level, if everyone is on e-freeze, everything is being invoiced through e-freeze, they'll be able to know your fully, your revenue and your income and your expenses. And so straight up, the tax liability will be within their reach. So you may not, when you reach there, be required to file a return. And if you are required to file a return, it will be basically to affirm whether you agree with what is in the system or is there anything else which is additional. Because the way tax returns are done, especially for a big company, you may want to do a lot of, the depreciation is here and there differently. You may do provisions, all that. So a return may still be required to file because, but they will already be having a picture. And I think at that point, even the work to be done in terms of manual intervention may be not to the level that it is right now. So in short, we don't have this yet, automated filing. So we unfortunately we still have to do the manual intervention to the level that it is. New companies, yes. Even if you started your company on 29th, starting a meaning, if you registered for tax on, let me actually say, 31st, assuming your team became effective on 31st of December this year, you will be required to file a return. Why? Because URA won't know whether you hit a deal on 31st. They can't know. So that's why it is self-assessment. You file. If you registered in August and you haven't operated, URA can't know. So the best thing for you to do is file a new return. No one refuses that. You haven't operated, the facts are there. Unless the facts are showing otherwise. The facts are there, file a new return. It doesn't hurt. Actually, you should. But if you don't do, URA will assess. So please put in a new return. Okay. So SMC versus sole proprietor. No, they are not the same. SMC is a company. Okay, it's a single member, but it's not a sole proprietorship. They are different. So the tax requirements of an SMC is exactly the same as the tax requirements of any other company. Because here we'll be having only one director. Then in the other company, maybe having more than that. Okay, so they're different. Uh, Close your business before URA reaches you. Close your business is catered for within the tax law. If you want to close business, of course, you go to URSB, notify all that we do. We have had those situations where someone wants first close business temporarily. Maybe things are hard, but you must show URA evidence. So what happens is go to URSB, notify that you want to close the company temporarily, it is a company, share with URA, suspend the team so that they don't expect returns from you. Okay, you are covered. But if you do it outside the tax law, the guidelines of the tax law, and then you'll be doing, let me, for lack of a better word, you'll be doing it illegally. And for them, what they will do, they will continue chasing you around, sending mails here and there. So you are not safe. Yes, you can do it, you as an individual, but the risks are there. But I'm saying there's a way you can do it within the tax law. Thank you. Ronald, I think that's what I had listed.
All right, we have a couple of more questions which are coming through. Yes, I think uh, yes, Feli says, thank you so much for the presentation. That a few minutes late. I would like to know to know more about how a business that makes less than 5 million a month is handled in regards to filing. The business already pays KCCA annual requirements of tax and licenses. Is business okay to join IFRIS? That's the question from Felista. Uh, then we have David. David says, which tax regimes are applicable to PDM circles? Possibly cooperatives as a whole, circles as a whole. James says, thank you for the nil filing, return filing information. That's what James says. Bernard says, what is the fate in line with taxes for companies deregistered by URSB? What is their fate? I don't know whether there is a hand up. Let me see if you want to ask. I'll give you an opportunity. Please do put your hand up and I'll give you an opportunity to ask. I don't see any hand. Possibly you could address those as we wait for others.
Okay. 5 million and below. That is your turnover. The person is asking if they are supposed to register for IFRIS. Of course, IFRIS is still contentious, but uh, for, as at the last time, you know, that they fully pushed this, they were now looking at VAT registered businesses. But I can assure you that the intention is to move past the VAT registered businesses because the interest here is really knowing the performance of your business. So I can say now that my knowledge, if you have sales of 5 million and below, you may not be required really to register for IFRIS, you know, unless you have registered for VAT voluntarily, because at 5 million, this is less, so you wouldn't be required. SACCOs, uh, SACCOs, the only way you'll be required to comply in terms of income tax filing and all that is if you're registered for income tax, maybe your circle is making some incomes. If your circle is in such a way that you lend money out and then the members bring it with interest on top, that interest is income. Okay, and under the income tax law, that is subject to income tax. But also, circles, the most common applicability would be if you have employees who are working for the circle and you are giving them some salaries, you must register for payee and file those returns, okay, because they are earning income. So you, as a circle, will be the withholding agent. Okay, that will be the application really in regard to circles. Third, of URSB deregistered companies. I would advise that if your company has been deregistered by URSB, take the evidence of deregistration to URA. The goal being suspension of your team. Because the moment you show evidence that my company has been deregistered by URSB to URA has no business in insisting that the company is operating. Okay, so just take that evidence to URA, engage them, and then you can have your team deactivated or suspended until when perhaps if you still want the company, engage URA to reactivate because that process is still there to reinstate your company. Yes, I hope my responses have helped Ronald in those questions. Ronald, can't hear you.
Hello?
Ronald?
Yes,
Yeah.
thank you so much, Maurice. Sorry, I was muted. Great. If there are any hands, you could put up your hand if you want to ask Maurice a question. We have a couple of others which are coming through here. Uh, if a business is deducted, if my business is deducted on withholding tax monthly from the customer, do I still have to file? I think, Maurice, it may be helpful to explain exactly what withholding tax means and what the implications of withholding tax are. Because some people look at it as a final tax. So I want you to talk to that and fairly ask that question. Another question which comes out is, let me rectify. A customer I supply deducted withholding tax monthly on my every 1 million sale and pays URA. Do I still need to file a return? That's the question which is asking. Um, David asks, how do I file an objection? I don't agree with what URA said. How do I file an objection? Then Sheila asks, this is what Sheila has to say. Thank you, Sheila. It's a very good presentation. Give Gives a good overview of what is required. At what point should a business engage the services of a tax consultant? Should it be ongoing at the beginning or whenever the business hits a milestone or like sales increase? When should we engage you, Maurice, tax professionals? I know you speak for the broader family of CPAs and CPAs, tax advisors and certified public accountants. When should a business engage? Because we hear you are very expensive and we can't be able to afford you. But when should we as business owners engage? I see Grace's hand. Grace, please go ahead and unmute and ask your question.
Thank you so much. This is an informative presentation, but someone had asked that can one pay in installments if they don't have all the money by the end of the year? I didn't hear that response.
Oh, yes. Maurice, please answer that. I don't have the money. Can I go and have a conversation with URA to be able to pay in installments? Is that possible? Judith, please go ahead and ask your question. Judith, please ask your question.
Good morning. Thank you, Maurice, for this very, very insightful presentation. I had two questions, but the other one about affordability has been asked. The other question I have is, if I worked for an organization and I was registered as a contact person in URA, and I no longer work in that organization, and the organization has ceased operations, but I continue to receive notifications from URA, how do I go about that? Thank you.
All right. Thank you, Judith. I don't see any other hand. We can take those for now, and then we can see if we have time for another round.
Okay. Thank you, Ronald. Let me start from the last one and then back. So you worked as a contractor and you are not working there anymore and the organization has ceased. What's not clear to me though is you worked on contract. Did you work on contract as an employee or did you work on contract as a service provider? Ronald, I don't know that because the implication and handling would be different. Ronald, I don't know that the lady can throw some light on that. You worked on contract as an employee or as a service provider. Service provider meaning a vendor, supplier, which is important to know so that I can answer that. Maybe as the lady tries to come back.
Mugisha, do you want to put up your hand again? I'm trying to look for you so that you can respond to that question. If you raised your hand again, I'll be able to see you. Great. Here you
Okay.
are. Please, you can unmute and ask your question. I rather respond.
Thank you. Sorry, I was struggling to unmute. I worked as an employee.
Okay. If you work as an employee and your contract ended, you know, the notification is that you keep getting from URA. I do not expect notifications. First of all, if you were an employee on contract, it is the employer who has the tax obligation, not even you. Because for you are an employee, it is the employer who has an obligation to withhold money from your salary and remit it to URA. Okay. So the notification should actually be given to the employer, and then it will be the employer to advise URA that we see the operations. But for you as an employee, I think the notification is in regard to the income that perhaps you are earning at the employer's place would be misplaced. However, you need to look at your tax profile because you may have been an employee, but perhaps your TIN was registered not under employment income, but was registered under business income. If that's the case, URA will be looking at you as someone who earned some employment income at some point, but you also have a business somewhere. So that's why the notification may keep coming. So it is important, I think, to understand the reason fully why the notifications come to you. Look at your profile. What is there? If it is only employment income, I don't expect notifications to be coming to you. If they are, then it will be misplaced because it is not your responsibility to withhold the money from your own salary and remit it to your no, to the employee who has that responsibility. I hope that helps. Installment payments. Yes, this is an old arrangement. You can always engage URA. Actually, it is on the website. You apply for installments. Cash flow is hard, you apply for the installments. However, applying for installments doesn't mean that the 2% late payment penalty or interest will go away. They will accept the installments, but the interest will be accumulating for the amounts which are not yet paid. That's how the tax law is. And if you want any waivers, the process of applying for waivers of interest, actually the powers lie with the minister. But of course, that's how the tax law is. But those applications can be made, for waivers, although it is an engaging process. But yes, installments possibilities are there, and they're working. Requirements for okay, when do you engage a tax consultant? When you engage a tax consultant is the day you start Actually, the day you register your company, that is the best time for you to engage a consultant. Why? Why? Because you will have a company which you registered, you are and got a team for, you are not operating, and you are thinks you're operating. They will start throwing assessments to you when you're not filing. So the only way you'll know what you're supposed to be doing is by engaging the consultant, the tax consultant, you know, and then he will advise you that file new, and that will happen. URA won't have an issue with that as long as it is factual. They say that tax consultants are expensive. Yes, they can be, but it is about the strategy, about the methodology of the firm. For us at MWD, we look at the client need and we look at the client's capacity. So we cannot be talking about charging, you know, 500 for filing a new return. Okay? No, because the business is not working. So really, our rates are very flexible, and you'll be surprised. You may even be having much higher figures in your minds of how much we charge. But we charge very little. We charge what suits the purpose at hand. So don't be afraid to call us, engage us. Okay, myself, uh, available, and then I have a senior tax consultant who is on site. Henry Kivumbi is on this call as well. Always engage us, and I shall always have something worked out. Don't worry about the money. The money can always be discussed. Okay. Uh, thank you. I'll share my contact as we close. Objection process. The process is there laid out in the tax law, and it is on the website as well. But what you need to know is that as you object, you must present the facts. If you are assessed to 100 million, and for you are saying, no, I didn't operate, then bring your facts. You bring your facts. If you are assessed because you didn't file, the objection process is attach the nil return. But the challenge with that is, if for instance you didn't file for your company for the past 5 years and URA has assessed you for a return of 2018, now in the objection process you will attach the return of 2018 as your evidence. But the problem is the system will look at that as late filing, and you run a penalty of 200,000, which I talked about monthly from 2018, and you may end up with 15 million. So you see the consequences of not filing. You'd rather file nil to avoid such cases. So if URA assesses you, you bring your evidence. The main evidence would be, the bank statements. Show them I have no activity here. Sometimes they'll ask for the audited accounts. Audited accounts you can, spend on it, but little money as well. Okay, with the guidance of consultants like ourselves, and handle the issue. But filing is very critical, whether nil or not. Objection process, it is there, and you can always be guided uh, on it. Yeah, but like I said, you must attach a return to it and then follow the steps on the URA website. Okay, but what is important, the filing on the URA website is very easy. But what is important is what are you attaching as your evidence? Because your goal is to undo what URA has assessed. So that's why the consultant comes in to advise you that, you know what, this one will pass. Did URA make a mistake? What's the tax law? Okay. Did URA assess because you didn't file, or there's some criteria they need? So what evidence can we put for it to pass? Because your goal is for the objection to be allowed. Because you can object and they refuse, they reject. And when they reject, the next level, as per the tax law, can be expensive. So it is important that as you object, you engage someone to guide you. And it is a cheap process at that level. Because they won't charge you expensively for an objection. No, you can always stop very affordable figures. Okay. Um, what else? If your supplier is withheld, I think these two questions are the same. If you have been subjected to withholding tax, should you file again? Okay, withholding tax enforced by a supplier. Okay, withholding tax, the one we're talking about here, if I can throw some clarity based on what Ronald said. Withholding tax, the one we're talking about is where you have sold your product or good. You have a shop down there, you have supplied maybe a government organization, even a company, and that company is a withholding tax agent, withholding tax agent. Withholding tax agents are picked by the URA based on their tax compliance to help the government collect taxes. So if I've supplied 1 million and above, or even aggregated, because sometimes the trick might be you split the invoice, but those rules are there. The URL will only do it based on the rule that you have split the invoice, but otherwise the contract amount is 1 million and above. So what happens is your supplier will withhold 6% and remit that 6% to URA and give you the balance. That amount which has been passed to URA is tax paid by you in advance. You have paid tax in advance, but it doesn't mean that you have filed a return. What am I saying? You must file a return, especially if you're in business. File a return. So what happens is file your return, then show URA that company X already withheld tax of such and such amount. So my tax, which is supposed to be, say, 2 million, I'm going to pay you only 1.5. Why? Because 500,000 was withheld by company X. And you put evidence because there are references to those withholding tax certificates which come automatically when the other company submits. However, what you should always make sure is we are in December, for instance. If you have gotten payments in December, ensure that you monitor your messages from the URI in January. Messages showing that your customers remitted that withholding tax to URA. Because that message will come with a certificate. That certificate is your evidence, okay, for your records. Okay, so that's what happened. So you are supposed to file still. It is the requirement. The only people who are not supposed to file are employees, because employers withhold tax. An employee doesn't have to file a return. No, it is in the tax law. Also, if you have earned interest from a bank and you are an individual, you don't have to file a return for that interest you have earned. Dividends, you're an individual, you don't have to file, you know, unless you're a company. Yeah. Um, yeah, I think that is it. That's what I've listed here as of now, Ronald.
All right, we will have an opportunity to just possibly deal with one or two more questions. If there are a couple of more questions, please put up your hand and ask in our final segment of the Q&A. I see one in the chat box. Um, yeah, John says, thank you for the tax education. More is needed to enable tax compliance. I totally agree. Judith says, what are the tax obligations of charity organizations registered as companies limited by guarantee? What are their tax obligations? You could touch on that, and possibly we can be able to wrap it up.
Yeah, so if your company is limited by guarantee, what you have to understand, colleagues, is that when we talk about income tax, we are talking about income being earned by either the company or any other organization or an individual. So the question is not really about how the organization is registered. The question should be, this organization registered as a company limited by guarantee, does it make income? The organization which receive grants. Okay, if you receive a grant, that is income. Okay, you're not in business, but you're receiving grants. That is income. So you are expected to file a return to show your income is in the form of grant and expenses. So yes, you must file a return because it is income. There are organizations which are stipulated as not taxable. For instance, uh, organizations like the ICPAU, the one which regulates us, and the accountants and tax advisors, the lawyers, those bodies, those professional bodies, the surveyors, engineers, architects, uh, those the income they're not taxable, and they are in the income tax uh, law. So URA won't seek for taxes from them. Then also other organizations which help to build talents of the amateur younger people we have in the country. Those are listed as no tax. So if you are not among the organizations which are listed, you will have to file a return. Okay, you have to file a return. But the criteria is look at what you are receiving. Are you earning income? Doesn't matter how it is. If to the donation, it is income. So consider it as income, subtract your expenses, show URA what your position is. If you want any special exemption, you can apply to URA and they'll look at it on a special basis that you want your organization exempted from income tax. Special basis. Those provisions are there in the income tax law. But do not make your own judgment. That the way I look at this organization of mine, I know I'm helping people. I shouldn't be taxed. No, you'll be wrong. You'll be exposing yourself. So seek for help, engage us, and we shall guide. Thank you.
Wow, 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 wow! What an expose on a very an issue which is close to our hearts. We try to have a session on tax every quarter on the business recovery series, but it's clear how much needs to be done. I totally agree with members who say we need to do more on this, and we'll continue having such conversations. Maurice, thank you so much for joining us today. I just wanted you to share with us your final remarks. And possibly as you do, you also touch on highlighting the filing timing and the filing time. That's a question from Fred. When exactly do we need to file? Is it after 15 days? At what point do we need to file? I think you touched on it, but you can touch on that specific question and then also give us your final remarks to wrap up the day.
Okay. Filing. Uh, in this session, you have been talking mostly about uh, income tax filing for end of year. And so income tax filing for end of year, if I can just run over it quickly. If your year ends in June, you have 6 months timeline to file. It is ending on 31st December. That is for income tax. Okay. Two returns: final income tax return for the year which ended in June on June 30th, 2024, and then provisional return for the year which we have moved now 6 months, running from July 2024 to June 2025. That is if you're a company. If you're an individual and you're earning rent, there will be a rental return to be filed 31st December. It must be done, filed. Then there will be an individual return also 31st December, okay, to be filed. Uh, then the monthly return is that the VATs, the payees, those are monthly and are supposed to be filed by 15th of the next month. So as we are in December, we are supposed to file by 15th of January, okay, for the month of December. So that's for the monthly returns. I hope that helps. Uh, Ronald?
Yeah, I
Um,
think I think I think that's perfect. And please just share with us any final remarks to the group.
okay, thanks. Thanks for the colleagues in business and any other areas of your operations for doing this session. The way the tax uh, program is in Uganda now is that we must work within the tax law. The best way, for lack of a better word, beat URI at its own game is by looking at the tax laws, where are the opportunities within the tax law. Not say that you are looking for ways of evading tax. No, you're looking for ways of ensuring that your business operates in a tax efficient manner. Because you are a person who will not enforce any tax collection from you which is outside the tax law. Okay. Normally, the weakness by people in business is our limitation on the knowledge. So the URA person comes with a lot of knowledge about the subject, for you don't. Okay, and then you are intimidated. Why you're intimidated? Because you're not armed with the knowledge. So the best way to arm yourself is by, of course, being up to date, but also engaging tax consultant by ourselves. Okay, and it is cheap. I'll keep saying this. It is cheap. Don't be lied to think that we are expensive. Engage as scholars, and you'll be surprised at how cheap we are. But it's about flexibility. Understand what the client needs and what the client is capacity, and we shall always work together. So compliance within the tax law and planning within the tax law is the way to go. And where you are not sure, as you open your country, engage, call us. We shall guide at no cost. We shall guide you on what to do. Okay, that's the way forward. Compliance within the tax law. Anything outside that, it may benefit you for now, but it might lead to collapse of your business. You don't want that. Those are my closing remarks. Maybe Ronald, if you could allow me to share contacts, just in case colleagues here want to engage us, I would very gladly go ahead.
Sure. Please do post the contacts also in the chat box, and you can possibly put back that screen of your contacts. As Maurice mentioned, he's a CPA, and he has been gracious enough to share this time with us. His wide knowledge, and he belongs to a bigger family of certified public accountants under the Institute of Certified Public Accountants who offer this kind of work in different parts of the country. So please go ahead and engage. Ensure that usually when you are engaging a tax professional, they are actually certified. And how do you know they are certified? Are they members of CPA? Do they have certified tax advisory credentials? And that's how you know that they are certified, because you don't baptize yourself an accountant. You have to have gone through a process to be able to do just that. So a big thank you, friends who have joined us today. This is our final session this year. We shall be closing for about 3 to 4 weeks. We shall start again in the third week of
Rodolfo,
January. Uh,
Rodolfo, sorry.
yes, please.
Are you able to see my screen? I wanted to share with the colleagues our
Yes,
contacts.
yes. I think we are able to see your screen, so you can pick that number up from the screen, and also Maurice, go ahead and post it in the chat box. So a big
Okay.
thank you. So for all the members who have been here every other week, I see many of you on the call. Thank you for putting aside every Thursday morning to just come and really learn and be able to grow your business. Some of us met physically a month ago at the Global Entrepreneurship Conference rather. Uh, thank you for putting in time. We are going for a time of rest. We are going for a time of reflecting and spending time with our family. But I want to thank you for your commitment, for your patronage of the Business Recovery Series. Thank you so much. There are a number of people who work in the back office. Derek, who leads our team, which sets up the Business Recovery Series. I know you receive emails. I know you receive, sometimes you receive calls from one of our colleagues who posts on your WhatsApp group. So Derek, Kamba, thank you so much. George Jr., thank you so much for the work you do to make the Business Recovery Series a success. To the people who I co-host with, Belinda, co-hosts with me sometimes, Rosemary co-hosts with us sometimes. A big thank you for doing that. And to you, the business community who keep the businesses going, thank you so much. We're going to send you an evaluation form sometime within the next couple of weeks or early next year to just find out what would we want to see next year. Please fill in that form. Give us feedback on the talks and what you are looking forward to. Follow the page on the YouTube page. Derek, you can post the link to the YouTube page in the chat box. Follow our handles on Twitter, rather on Twitter or X. We don't do a lot of work on Facebook, but follow our handles. Make sure that you are getting the message out, and call a friend. Tell him, you know what, every Thursday morning there's something to learn from people like Maurice who share with us and many other professionals. so that we can keep this journey going. From us at Enterprise Uganda, the Enterprise Uganda team, we treasure you. We want to wish you a Merry Christmas and a prosperous 2025. And thank you. Let's start next year strong. Let's keep running. Yes, James, the presentation will be shared. Maurice is going to share with me the presentation, and Derek and the team will be able to put that on your emails and you'll be able to receive them. Maurice, thank you so much for being the person who has put together our final session this year. We are always honored
Pleasure.
when you, the professionals, come out. Sometimes getting to offices can be difficult, but you demystified it as you have said. You're open, you're trying to help businesses, and you are here to help us learn. Maurice
Pleasure.
volunteered time to do this. So a big, big thank you. Friends, thank you. The YouTube channel is there. Please click in there, follow the page, share the page. Every time you do that, you help us to get this word out. And why do we want this word to get out? Because we know deep down that when businesses succeed, the country succeeds. When businesses succeed, the families succeed, communities succeed. And that's why we need your businesses to succeed. Have a blessed Christmas season and prosperous 2025. All the best. We'll be back with the business recovery series in the third week of January of 2025. For now, please share some time with your families. And as we celebrate this time when we remember, especially those in the Christian faith, remember the birth of Christ. A big, big thank you to all our brothers and sisters here. Stay blessed and have a lovely, lovely holiday season. Bye for
Thank
now, and we'll see you in the third week of January.